And specifically?
Compensation.
Earthquake insurance. Earthquake insurance. Alright, we got to talk about that. Here's why the CEA, the California Earthquake Authority, has come out with a new policy. It's called the choice policy. And whereas before it was a standard policy, a lot of homeowners I've seen have just their dwelling insured, and then they have the two default position on personal property and loss of use. Personal property, again, is everything that you wear and have with you today and whatever is in your home. If you were to take your home, take it upside down, shake, everything that falls out, that's personal property. The default position on the old CEA policy is $5,000. So if you do not care about your personal property, not a problem, because then you have adequate coverage. But if you do have, clothes, furniture, and so on your homeowner side, insured probably for $100,000 or maybe even $200,000, and then you have $5,000 on your earthquake policy, you're completely underinsured. And then the second default position is loss of use. Loss of use helps you to pay for expenses while there's a claim. Your first couple nights probably in a hotel, and here the insurance companies will pay not only for the cost of the hotel, but also for the meals that you consume at the hotel. Okay? Default position is $1,500. So you would probably run out of coverage within 10 days. Because I don't know any hotels around here that will let you lodge for $150 or less. Okay, and that's not counting food. So what I do is when I review an insurance policy, and let's start at the homeowner's side of the equation, I ask the client, how important is earthquake to you? And if they're very concerned about earthquake and that's a priority to them, then what I have to do is I'll have to make sure that I match the coverage on the homeowner side as well as the earthquake side. So the CEA, I don't know if you guys remember, but they work with certain insurance companies, but you cannot come in and just purchase an insurance policy by itself. We call that a standalone policy. You can do that with other carriers that I also represent, but you cannot do that with the CEA. The CEA has to be attached to your homeowner's insurance company. AAA is one of the members, Mercury, Nationwide. I could go down the list if you are very interested, and you can just go to the CEA website, which is californiarocks.com, and then you can just look on carriers, and it'll tell you, what kind of carriers are represented by that company. But what I do is, since I am a broker now, I have a wonderful company called GeoVera, and then I have another company called Zurich. That's the mother company of Farmers. And they both write standalone policies that have great coverage. On the Zurich side, they also do offer a standard policy, meaning where the default position again is $5,000 for personal property, $1,500 for loss of use. But oftentimes homeowners have personal property, especially like art and maybe jewelry coverage that they want to have covered through their earthquake policy. I would go to Zurich. And then GeoVera has a very, very nice policy feature. What they do is they calculate the replacement cost of your home. And let's say that's $400,000. And then they give you a policy that covers $600,000. And now, under the $600,000, everything is covered. Your dwelling, your personal property, your loss of use, it's a combined single limit. And the advantage there is, yes, you may have $200,000 worth of personal property, but maybe not all of it got damaged. maybe only $5,000 or $10,000 got damaged and needs to be replaced, probably breakables, such as glassware, TVs. But now you need more coverage either on the dwelling side or for loss of use, because quite honestly, if there's a large earthquake and you have to live away, it's not going to be fixed within 2 weeks. You know, it's going to be, first of all, when there is an earthquake, you're not the only one who has a claim. So you have, you know, an overload of work that needs to be handled just administratively. And then on top of it, you know, everything needs to go through a human hand. There is no computer program where you can just run it through and, you know, there's a check on the bottom that gets printed out for you. And then we also represent companies, especially Encompass, which is an Allstate company. They have a feature where there's a loss, you have to have a specific title of the insurance, meaning it has to be written on a certain piece of paper. But if there's a loss, and it's a total loss, and you want to cash out, meaning you say, cut me a check, you can walk away from the property. Around here, that might not be such a bad idea, given that the land is worth, you know, a lot of money by itself. So, you know, that's basically what I do when I'm at work. I, you know, ask the client how important are these type of features to you, and then I go ahead and I shop them accordingly. Question?
What's the waiting period for reimbursement on like hotel stay and stuff like that? Is there one?
It's all handled within the claim by itself. So typically in a scenario like that, you would have several waves of, you know, of reimbursement. I had a homeowner in Santa Barbara insured. The wildfire came through and there was a mandatory evacuation order, which triggers loss of use, right? And he got a check cut on the spot for even more than he was spending at the hotel. Because at that time, you know, the insurance companies really want to shine and really want to say, hey, you know, we're there for you. I mean, we collect your premiums throughout the years, and now you're in need of it. So, you know, especially when you don't even have access to your own home, we want to make sure it's as comfortable as possible.
So the CEA, I imagine, is sitting on a lot of money.
$10 billion
Right.
plus.
What do we do with that money in the meantime, just on a regular basis?
It's in a reserved fund, okay? So it has to be liquid. It can't be that they go ahead and, you know, invest in, you know, a company that is developing, you know, medical equipment. It is just sitting in an account, in a reserve. We call it a reserve account. And yeah, they have the power to make every homeowner well if there were an earthquake the size of the Northridge earthquake. Because the participation in the actual product is not as high as it once was. And also the policy limits are lower. So the policy in the past was a lot more comprehensive. So therefore, right now, they need less to settle for the claims.
Is it possible that the government gets its hands on it?
No.
No.
So I guess there are three thoughts. Number one, there's usually deductible of like 20 to 30%.
Yes,
So
that's a good point. I
Yeah.
forgot that.
Yeah, so that's something that that's gonna be out of pocket. So if you have, so that's one thing. And then if you had a rebuild of 400,000, or let's say 800,000, and you added 200,000, is that just for that one company? In other words, that's the add-on for loss of personal use and personal property. Is that right? Is that something you would tack on to 200,000 onto a rebuild anywhere?
The 200,000 was just a number that I had given as an example. It's actually a percentage, but thank you for reminding me of the deductible options. There used to be a standard 15% deductible, that you could buy down to a 10%. Now they go down as low as 5%. Okay? Because a lot of homeowners are discouraged in purchasing the insurance because they're like, look, you know, $30,000 is my deductible. The damage is probably going to be $35,000, so therefore I have a claim for $5,000. But again, there are two other things that are important when it comes to earthquake insurance. One is building code upgrades. If you have a strict city that says, hey, your home's damaged, now when you rebuild, we're only going to give you the permit if this, this, and this is done. And you don't have coverage for it, you pay out of pocket. And that could be a lot. Especially in the city of Santa Monica right now, if you want to rebuild your home, you have to have fire sprinklers installed in your home. And then I heard also, and I don't know if this is for residential and commercial, but it's definitely for commercial. If you want to do any type of improvement, you have to fix the alley for the city as part of the permit process. And if you add any type of living spaces, there has to be a right mix between affordable housing and housing that is just purchased, on the street.
So these last two things, the buy down and the code compliance, is that with the CEA or with everybody? Or
It's with everybody. The CEA now goes down to 5%, so they have a 5%, 10%, 15%, 25% deductible. And then the building code upgrades, that's just something that you need to make sure you have, like you, for example, on your primary policy, I know you have it. I know that everybody that pretty much purchases a policy from me is offered that at an adequate amount. But the other one is loss of use. Loss of use, by the way, has no deductible. So if you have a $30,000, $40,000, $50,000 loss of use coverage on your policy, there's no deductible. It goes first dollar. Yes?
The policy you were talking is cover all kind of homes, like individual homes or condominium or apartments?
Very good question. So,
And another question is, I'm sorry, if the house is on rent, it's whose responsibility to do for that insurance, and whether the tenant's properties are covered under that?
very good. So to address your first question, can you repeat that question again?
It covers all kinds of the houses, like?
Oh, yes, so the CEA covers 1 to 4 units. 5 units and up is considered commercial, and that is not covered under a residential policy. So your underlying policy would not be what we call primary homeowners insurance, it would be a commercial policy. And so the CEA does cover homeowners, it covers renters, and it covers condo owners. And the condo owners would basically have their contents insured, and I would strongly advise for them to have enough coverage to have an assessment from the HOA being covered on the policy. An assessment is if there's a loss to, the common area, they now have to assess each homeowner and say, hey, you have to chip in 1,000, you have to chip in 1,000, you have to chip in 1,000. And of course, with an earthquake damage, it's probably a little bit higher than $1,000 that everybody has to chip in. If you have insurance for it, your insurance company will reimburse you for that. Now, the second question was, what is a tenant going to do? A tenant can purchase an earthquake insurance. You are not responsible for the building, so therefore there's no insurable interest for the building. You would only be concerned about your personal property.
Then the tenant has to insure that?
It's optional. It's
How about
optional.
like
It's
loss
offered.
of use? How about loss of use as a tenant?
Yes, that would be a reason to get an insurance policy for the loss of use.
Yeah, if you own the property, then when the
Yeah. And then I would refer to the lawyer in the room, what would happen there? And I know you're more.
It was worse. Sex and money, that's better, right? Stress.
But there's probably, you know, it depends on how strong the lease agreement is, you know.
That's a Robert's job.
Yeah, we need Robert minutes. Yeah.
Okay, so we were talking about the CEA, you said the default policy, you explained that, but then you mentioned something about a choice,
Yes.
but you really didn't say what that was.
Yes. The choice policy is the new policy where what the word says, you know, you can pick certain deductibles, you can arrange them, you can, you know, go down to as low as 5%, and you can say, okay, on personal property, I want $75,000 worth of coverage, but I don't want any loss of use coverage. Or I don't want any personal property, but I want the maximum of the loss of use, which is, by the way, $100,000.
What about if the homeowner during the earthquake or anything is deceased or dead, then what happened for the policy and the rest of the family members?
Then he better have bought life insurance. No, what happens is the property then goes into the possession of the heirs. And
Are they going to be benefited out of that policy? Or?
the policy would follow the property address. So, you know, whatever property was insured, the insured, you know, dies during the event, the property would be covered. And the property would be made whole. So what's important is that there's a replacement cost policy and not an actual cash value policy, so that the home can be, you know, replaced. I actually got off the phone with the homeowner this morning. Her home was this was 3.5 weeks ago. I don't know if you guys remember, but there was a fire in the Cajon Pass that went through Idlewild and through Lytle Creek. And her home is located in Lytle Creek. And she called me and, you know, she was just, you know, very, very concerned, and so was I. The house that was not touched by the fire, but I wanted to make sure that we again go over the coverages and just make sure that if that were to happen again, that she doesn't have to freak out. You know, we wrote the policy a couple of years back, and unfortunately it's in an area where typical insurance companies don't write coverage. You know, it's
What is the waiting period? You're sitting there and you see the smoke down the street. You know, I would really, really like to insure my home right now.
yeah. That would
Is there a
be,
period of time where they, you know, it's like,
well, what happens there is there's moratoriums that are being put in place. But if you actually know that there's a potential loss coming your way, and you go ahead and you insure for it,
okay, you can't do that.
yeah, they're gonna get a letter, and it won't have any attachments to it, meaning there won't be any checks in there. It's gonna be a denial letter. Yeah, you can't. Let's say if you know, for example, there's a fire coming down the ridge, and you want to insure the home just right in time.
Too late,
Too late.
when the earthquake rumbling.
Yes, and there's actually in the CEA policy, there's actually a waiting period that's specified, and then there's also what's called an event. So an event is, and I believe it's 168 hours, which equates to 5 days. That's considered, because you have a shock, and then you have aftershocks.
Right.
You know, I don't know if you guys have seen any of the footage of the earthquake in Italy, but they were like trying to dig out people, and an aftershock came, and this crane was just going, you know, ballistic. So I know my time is up. Are there any other questions? Thank you very much.
Thank you.